Your portfolio is about to get hit by a financial earthquake, and most people won't see it coming. Right now, the Dow, S&P 500, and Nasdaq futures are pulling in three wildly different directions, all before a multi-billion-dollar IPO that could either launch your investments to the moon or send them crashing down. But why are these market titans diverging so drastically? And what hidden forces are truly at play behind this chaos? Forget everything you thought you knew about market stability. Today, Wall Street is a battlefield, with each major index signaling a different future. This isn't just market noise. It's a critical signal about where your money could be heading. We're talking about potentially historic shifts, all influenced by one of the biggest tech IPOs in years. Stick around, because understanding this divergence is the key to protecting and growing your wealth in the coming weeks. Let's cut right to it. Your major market indicators are screaming conflicting messages. The Dow Jones Industrial Average, often seen as the old guard, shows resilience, even growth. But then you look at the Nasdaq, the tech darling, and its flashing warning signs, futures dipping significantly. And the S&P 500, our broad market barometer, it's caught in the middle, barely moving. This isn't normal. Typically, these indices move in tandem, reflecting a general market sentiment. So what gives? Why are investors suddenly so divided on the future of different sectors? Is it the start of a massive rotation, or something far more sinister brewing beneath the surface? Now, let's talk about the elephant in the room, SK Hynix. This isn't just any IPO. It's a potential mega listing from a South Korean semiconductor powerhouse. We're talking about a company that's absolutely crucial to the global tech supply chain, especially in memory chips like DRAM and NAND, which power everything from your smartphone to massive AI data centers. Think NVIDIA, but for the fundamental building blocks of computing. Their potential US IPO could inject tens of billions of dollars into the market. But here's the twist. It also creates immense pressure. Is the market ready to absorb such a huge offering? And what happens if this tech titan underperforms? This isn't just about one company. It's a litmus test for investor appetite for high-tech growth in an uncertain economy. But hold on, the plot thickens. This divergence isn't just about one IPO. It's deeply intertwined with the whispers coming from the Federal Reserve and the relentless march of inflation. Remember when interest rates were expected to drop like a stone? Well, those expectations are shifting and fast. Higher for longer interest rates hit growth stocks, especially tech companies on the Nasdaq, much harder because their future earnings are discounted more aggressively. Meanwhile, established, less growth-dependent companies in the Dow might be seen as safer bets. This subtle shift in monetary policy outlook is a silent assassin for some sectors, while others might actually benefit. Are investors truly pricing in a new era of higher rates? And if so, who wins and who loses in this economic game of chess? And here's what most people completely miss: the global chessboard. We're not just talking about interest rates. We're talking about US-China tech rivalry, supply chain vulnerabilities, and geopolitical tensions that directly impact companies like SK Hynix. What if a sudden trade policy shift impacts semiconductor exports? What if raw material costs skyrocket overnight? These black swan events, while unpredictable, cast a long shadow over investor confidence, especially in a sector as critical and globally interconnected as semiconductors. The market isn't just reacting to numbers. It's reacting to fear, uncertainty, and a very real possibility of global disruption. This isn't just about stocks. It's about the very foundation of our interconnected world economy. If you want to stay ahead of these seismic market shifts and get insights that genuinely impact your portfolio, hit that subscribe button right now. Don't let Wall Street's secrets remain secret. So what's the real story behind the Dow, S&P, and Nasdaq pulling in three wild directions? It's a complex dance between a massive tech IPO, shifting Fed expectations, and underlying geopolitical tremors. The market is not just diverging. It's telling us that the old rules no longer apply. The hidden forces at play are a blend of macroeconomics and microsector shifts, creating a volatile but opportunity-rich environment. The smart money isn't just watching, it's adapting. Stay informed, stay agile, and make sure you're subscribed for the next critical update that could define your financial future.